Hey everyone, welcome to another episode of the Everyday Real Estate Investor, where we talk to everyday people that are out there doing the thing and investing, and not letting all those obstacles get in the way that all those excuses that we tend to have, busyness, knowledge, all of the connections, all those things. I am excited to have an awesome guest here today, Martin Saenz. He is managing partner Bequest Funds. And we're going to talk a little bit about his story and about what he does in real estate investing. So, Martin, thanks for being here.
Yeah, Ben, thanks for having me on. I know we had a lot of back and forth to get this set up, so I appreciate your patience, and I'm glad we finally got here.
Yeah, you as well. Appreciate that. So, sometimes schedules and that sort of thing, trying to line them up, right? Because we're all busy, so which is great. So why don't we start out? Why don't you tell everyone, just so they can get to know you and where you're coming from, maybe a little bit of like the quick version of your background. How did you get involved in real estate investing in the first place? And then we can dive into kind of what you're doing now.
Sure, absolutely. So, my background started in 2004 after getting let go from a corporate job. And my wife and I just decided, hey, we need to go out and do something for ourselves. We were getting into Rich Dad Poor Dad and all his teachings. And we realized, though, we needed cash flow. We needed a stable source of income as we were building our real estate empire, if you will. And so we launched the federal government contracting company in '05, and we built that up over the course of years and started buying commercial real estate 2009. Fast forward to 2013, we sold the company, and we continued building our real estate holdings as landlords, both on the commercial and residential side, and started buying mortgage notes in 2013 as well. So really just went head in on the real estate asset class, if you will.
Awesome. Very cool. And I guess one of those blessings that you look back on, that at the time, being let go from a corporate job that you were probably pretty comfortable in, right? And so you, at the time, it's like, oh man, this is horrible. And then you look back and it's like, man, that's the best thing that ever happened to me, right? Because it launched me in a totally different direction.
Yeah, actually, yeah, that's about half right. So it was a horrible existence. I was really bad at corporate America.
Oh,
I was managing a call center. Half the time people were coming in stoned and making out in the hallways, and I mean, it was something very interesting that
that's
that
a
I
very
walked
interesting
into.
world. Yeah. Yeah. So
But
maybe a blessing. Yeah. But
yeah.
either way, you kind of knew it was, but yeah, it just kind of, I guess it kind of forced the issue for you, right? It's like, well, I guess now's the time to pivot. So,
Yeah, yeah, absolutely. And just I kind of didn't let the audience know kind of where I'm at today. Bequest Funds holds about 75 million in mortgages and commercial real estate. And my partner and I own that, and we run it on a day-to-day basis, as well as we're the largest investors in our own fund. So that's kind of the picture of how it is today versus kind of the
very
starting point.
cool. And that's a cool little that people may have missed. You're the largest investors in your own fund, right? So you believe in your fund. You're not just going out and taking other people's money and shaving off a fee, and you're not at risk yourselves, right? You really have a vested interest in making sure that the fund performs at its highest level.
Yeah, and I think regardless of where you're at in life or what you do, you need to have that skin in the game, just for your own confidence, and you need to have it where it's do or die, and be in survival mode, and that's kind of what it takes. That hunger is what it takes to endure over time.
Awesome. Yeah. Do you mind maybe getting into a little bit around, because funds and syndicating deals, a lot of that's some high level stuff, right? If you're starting out, it seems really intimidating, very daunting. Like, how can I even do that? Um, and there are a lot of complications to it. You want to make sure that you have the right team and all that to put that together. But can you speak to that a little bit, just as far as the setup of a fund and how that works, and maybe some tips for people, if they are maybe interested in doing something like that, running a fund and
Mhm.
taking other people's money, investing it for them. Maybe some of the pluses, some of the potential pitfalls, and some little tips with that.
Yeah, absolutely. So like any move in business, and this is just from my perspective, I think something should be an organic progression, and it should just be happening naturally, and you should make certain key moves because you're almost forced and left with no other option to do that in order to scale or make some positive gain in some way. And so that the first thing before like ever thinking about a fund that buys pools of mortgages or buys large commercial real estate is that you need to learn the fundamentals in whatever it is you do, and become a master of that. And how you do that is, even before that, is become a student, that you immerse yourself into the industry. So I get asked like a bunch of times, hey, I have 50K, I have 100K, how should I get started in the industry? And my answer is always like, well, you got to get started with self-educating yourself, self-reflection, understanding where you're at from not just a financial perspective, but an emotional perspective, time management perspective. What are some of your strengths and weaknesses? And who do you need to align yourself with in order to offset some of your shortcomings? And so this all part builds speaks to building fundamentals in any real estate endeavor that you make, and that really should be the first year or two, that you do things before you're just looking at the immediate return of something.
Very good. Yeah. And kind of on a different note, but just thinking about, you were using it in the context of, spend your money on investing in knowledge first, right? Which I
Yes.
am not saying that that's obviously that I agree. I totally agree with that. Education is super important. Um, Even if you're going to be a passive investor, but it made me think. So there's a lot of people out there that that's their question, and you need to be educated to some degree about what you're investing in, but they're not going to be ever be an active investor, right?
Mhm.
But they want to be invested in real estate. And so this is a great opportunity, something like what you have, to be able to be exposed to the market in real estate and some great assets, to be able to come along people that are actively managing those things, um, earn a great return, and be exposed to that real estate market, but not have to do all the things you have to do as a general partner, as a managing partner. So can you talk a little bit about that, and kind of that service that you're basically providing to people
Mhm.
that want to invest but aren't going to, or don't have the time, or desire to learn all those nuances you have to if you're going to be an active partner?
Yeah, absolutely. So, just so folks know, like our fund is built on one premise, and that is delivering consistent monthly income back to the investor in a predictable and consistent manner. With that said, if you're going to do this endeavor yourself, you're going to, like we talked about, self-educate. You got to put your own money out, skin in the game, and you got to build a business model for yourself that you can kind of prove out over time. But even if you come in as a passive investor that just says, look, I want to dump 200K in and I want to receive 20K annually divided by 12 months, and that's my monthly passive income. Even with that, you still need to have some level of education in the asset class, and in this case, real estate, where you're better able to process who the operator is, what their past performance is. Are they credible? And also from a due diligence standpoint, what are the due diligence processes that are in place that mirror industry best practices? How do they portfolio manage? How do they asset manage? And that requires you to be self-taught. And at the end of the day, all this kind of spells or reeks of taking back financial control in your life through education, and that's really the heart of what I think we're talking about here.
I love that, and I completely agree with that. I think, unfortunately, we, um, have kind of gotten to a place where financial education it's really lacking, and where people, it's just a norm to give control of your financial future over to somebody else, right? Whether that's your financial advisor, a stockbroker. You're putting it in your 401k at your work, whatever. You don't really think about it. People don't have they're putting money towards something, but they don't really understand it. They don't know what it's doing for them. And so, yeah, you could definitely do the same thing with something like what you do and treat it the same way, but that's not the proper way to do it, right? You don't want to shirk responsibility for um, knowing what you're investing in, having at least some knowledge of what you're getting into and investing in. Because otherwise, if you do and you lose money, you can blame the asset manager, but you got to blame yourself a little bit too.
Yeah, absolutely. You have to take a lot of responsibility for the results that occur in your life. Most individuals, they can tell you, how many billions Sam Bankman-Fried lost with FTX, or they can tell you what Tom Brady got in his last contract negotiations to play with the Bucks. They can tell you about, or Kim Kardashian, what she's worth, or whatever. You can go on and on. They can tell you about all these people that have made financial moves or gotten windfalls in life, but they can't tell you what's on their own financial statement. And so that's
Mhm.
really where all of this starts at, is with the fundamentals, is building a financial statement for yourself so that you can process it and you can add goals to it that you can work towards in a very systematic way, where there's metrics in place, and there's kind of a vision of where it is you need to go, a roadmap, if you will. And from that you can you can start moving towards financial literacy and making the right moves with the right players.
Yeah, absolutely. Now, when someone approaches, do you talk about that stuff with your potential investors before someone approaches you, says, "Hey, I've got 100,000 or 200,000. I've done a little bit of research on you guys or whatever. Maybe they haven't. I want to invest it with you guys." Do you walk through that? I mean, and if the answer is no, totally fine. I'm just curious if you guys walk through some of that financial education with them as part of taking on that responsibility of their funds.
Yeah, yeah. So I'll do the math with individuals. If we have a conversation, just about every conversation I have, I'm asking one question, and well, several questions rather, and that is, how much monthly passive income are you currently earning? And you'd be surprised. We work primarily with accredited investors. That's more of a sophisticated investor, quote unquote. And you'd be surprised that a large bulk of them do not have any monthly passive income. They may have money stashed away in Wall Street or stashed away in some real estate, but in terms of what really counts, and that is having monthly passive income that offsets your monthly expenses, they're not scoring well in that category. So then we
Yeah,
want to know, well, how long until you want to retire, and what do you need coming into you on a monthly basis to maintain the same standard of living that you have? Okay, well, if that number is 10K a month, then let's build you up an investment that pays a 10% annual pref at a $1.2 million investment, and into an evergreen fund like Bequest, or anyone else that you deem worthy of your capital. And then you'll get that reoccurring income over the course of time in a predictable manner.
yeah. And what's great about that is that you're talking about preserving and growing wealth versus retirement accounts and a lot of the traditional, quote unquote investments or retirement avenues are more set up to, okay, you're going to stock money away, it's going to grow, and then at a certain point you're going to take it and you're just going to bleed it, and hopefully you got enough until you finally move, pass on, and you may run out or you don't have anything to pass on to your heirs, right? It's just kind of this, you build it up and then you bleed it down, and hopefully the numbers all work, and it's not set up to actually preserve wealth and pass it on. And not and on top of that, not have that question of, am I going to have enough, even, right? Because you're
Mhm.
maintaining your principal, and you're set yourself up to live off the cash flow instead.
Yeah, what you're passing down is, so if you become a student that eventually becomes a teacher and you help other people, like I'm trying to do with the little that I know, and you actually become a better student. And what I believe I'm going to pass down to my four children is I'm going to pass down where they're going to know how to budget, they're going to know the value of a dollar, they're going to know how to build passive income, and they're going to learn how to build legacy wealth for themselves. Most people talk about, well, let me pass down money, and that's legacy, generational wealth and whatnot. But how about if you just pass down, how to fish, how they can build it for their children and their children's children, and along with whatever capital gets passed down is an additional blessing. But to me,
Absolutely.
that's where it's at.
That I couldn't agree more. Yeah, passing along the finances themselves. Uh, well, that's great, and you want to do that. You want to preserve that for for your kids and for the generations after you, and not have it flittered away in taxes or whatever. Right? You want to be a good steward of that, but the educational piece of it, and not just handing them that and then them not knowing what to do with it. Right?
Yeah, absolutely. And this is a very very significant topic. I know that you deal a lot in the real estate world. If there's agents watching this, hearing this, they're transacting for the dollar. If they stop transacting, the dollar ain't coming. And
Right.
so, at some point, you need to say, well, I need to transact and put away a portion into a vehicle that builds passive income over time. And well, what if you say, well, inflation's bad and I don't have that extra dollar? Well, then you have to push yourself to transact more. And it's just the law of math. I didn't create the rules on it, but to me, that's a better alternative than leaving it to Wall Street and hoping that it'll be there when you're ready for it to be there.
Absolutely. Yep. Yeah, and I always talk about that as as a real estate broker myself. Um, it just is shocking to me how many real estate brokers are out there that um, continue to talk about how great an investment real estate is and then never invest in real estate.
Yeah.
It's kind of crazy, right? But it's so truth. It's just so common, unfortunately.
It's
Um,
like a bridging, right? It's like kind of like there needs to be a bridge between they know how good real estate is from a transactional perspective, but then moving over to the investor mindset, that can be a hard bridge to
Yeah,
cross.
and I think it can go back to that. They just choose not to, or they don't know how to do it. Maybe they actually truly believe it is a good it is a good investment, right? They believe in real estate, but they just never take that time to educate themselves on how to do it. So that education piece is huge.
Yeah, and it's who you hang out with, right? I mean, the five closest friends, as you've heard all a lot of the gurus talk about it. There's truth to that. If you're associating with landlords and people building real estate empires, then you're gonna, be inclined to kind of navigate in that direction. But if you're hanging out with just other agents that are just transacting, and nothing wrong with that, right? You're making a living, honest living, but you're gonna do more of the same, if you will.
Absolutely, yeah, and that's one of the things that I look for as we're building our brokerage team is I want to add agents that are not only excited about investing or about being a good agent and helping other people, but I want them to be investor minded and be building for themselves. Not there's nothing wrong with helping other people buy and sell real estate, but you need to be doing some of that for yourself too. And everybody, and that's why I talk about that all the time. Everybody has different ideas of what that looks like, right? You don't have to go buy thousands of units if that's not what you want or need. But do something, right? Owning a couple properties is better than owning none. So
Yeah,
yeah.
yeah, absolutely.
Um, let's pivot a little bit if you're okay with it. I'm curious what to talk a little bit about the market and maybe in the sense of, do you have some specific markets that you invest in, and what do you look for in markets that you invest in? Now I know you have a combination of uh, commercial real estate and mortgage notes, right? So maybe the answer is different depending on what we're talking about. But what do you look for in a market? What do you look for in an asset? Just, I mean, that's a big question. So
Yeah,
I don't expect a full like how do you underwrite a deal answer or a market, but just some highlights I think of what do you look for in an asset? What do you look for in a market before you acquire something?
Yeah, so we purchase on the residential mortgage note side. I mean, we purchase pools of mortgages all across the country. So we really don't have a preference on the state. We're really focused on obviously the collateral. The underlying collateral is important, the property,
Hmm.
but we look heavily on the homeowner and their ability to continue to pay. So a lot of emphasis is placed on that from an underwriting perspective. Now, on the commercial real estate side, we focus in on medical office buildings in the Sun Belt region, where we see heavier migration happening, aging population, warmer weather. And so some other factors. We like Houston, Texas. We picked up a 60,000 square foot building last year, and medical office. And Houston's a medical epicenter, receives 9 million patient visits per year. I mean, just you could just go down a laundry list of how it's a great environment for a medical office building. So we also invest in energy. So we have an oil operator that we've partnered with that's been drilling for the past 10 years. So we believe in that case, we're betting on the jockey versus the horse,
Hmm.
and
Yeah,
that's very important there too. Is when you're partnering with an operator, you need to know that they know what they're doing.
especially with things like oil and gas. That's some potentially higher risk, but also some potentially very good returns. And there's a lot of great tax incentives around oil
Mhm.
and gas as well, which we won't get into at here. But yeah, some really good incentives for investing in that. Um,
I think the number one thing I could kind of say, and this is just something I'm passionate with, and I've been doing this for 15 years with my wife, and that is every week we look at our financial statement and we look at what income came in that was active, what income that came in that's passive, and then we have goals built around the percentage of the ways there that we are to the reaching our passive income goal, and we've already exceeded our monthly expenses a while ago with our passive income, and now we're just kind of shooting up to higher levels. I think everyone should really do that, especially just given what we've seen recently with inflation and just bad economic policy and the Federal Reserve, and all this has to be enough to scare you. And if it doesn't scare you, then it should. I
yeah,
just say,
you're not paying attention, or
yeah,
you need to start digging into some of that stuff. Yeah, absolutely. Yeah, and I think that's, I mean, the biggest thing about passive income. I mean, it's life changing, right? I mean, even if you start out with covering a portion of it, of your expenses, uh, it takes pressure off on the others. Not that you shouldn't go out and still produce, but it takes that pressure off
yeah.
of the earned income, and you can start making some different choices about your time. And it's that whole freedom thing, right? Like, okay, well, once my expenses are covered, I can now I can choose to do what I do, and maybe my passion is something completely different, but I can pursue that. Um,
Yeah, you touched on it initially when you were talking about capital preservation. There's just two wins there, that with the monthly passive income, and for one, the stress and anxiety you take out of investing, knowing that you're putting it in and you can predict years on out what you're going to get back, and your capital is going to be there the whole time. But the other thing is that you can take off of work, move away from the active income at some point, and just know that your passive income is covering you. So you have a sense of freedom there. So there's really two big wins with it.
Absolutely, absolutely. Okay, I want to hear this from you. I'm going to ask for a little bit of humility here from you.
Oh,
So
yeah.
tell me a little bit about either a challenge that because you've been doing this long enough. I know you've either uh, had some type of failure that you can share from and have people learn from, or just a challenge that you had to overcome in one of the projects or properties that you did. So share one of those so we know that
Mhm.
that's a normal part of the process, and you have to know enough to how to work through that, but mistakes happen or challenges come up and you just have to figure out your way through that.
Yeah, yeah. There's a lot. There's a lot.
pick
I
pick
just
one.
I'll go with when my wife and I, our first 3 years of business ownership, we were selling to the federal government. and just everything was very tight. We had about 200, I don't know, 230,000 dollars in credit card debt because we had to procure a bunch of equipment, and it was we were paying credit with other credit, and like playing that whole game, and
That is
just
not a fun place to be. Yeah. Yeah.
yeah, just talking to vendors and asking for more time. Please don't cut off the product supply. Where can we get a payment plan? So while they're calling for money, I'm asking for more product. So you're kind of playing that thing. And there was a few times, but there was one time in particular where I made payroll the day of that it was due, and I just sat in my car and cried. And so I just remember that that it's not easy. Like and Kiyosaki talks about this in one of his books. Like, you're either going to pay dues now when you're younger, or you're going to pay dues when you're older. And so it's just better to pay the dues now. And those were dues. Those were like being broke for years. But I learned how to hunt. I learned how to survive. I learned how to have a good nose for things. I learned how to not take things for granted, and just and so those lessons have kind of carried with me forward. So I would just say, if you're at a point in life where you're like, well, I don't want to kick it into gear because I got the kids are here in this place, and I got to spend time with my wife or husband, or just things are too busy, then if you're not paying the dues now, you're going to pay them later, and just keep that
Yeah.
in mind.
That's a good lesson. Yeah. And I appreciate the transparency on that. That's
Yeah.
I, I mean, my hope is that it's eye opening, and that it's inspiring for people that are maybe out there in a position right like that, right? Or struggling to get their business going or scaled. That hey, that's that's how business works. There's always growth cycles, and there's always there's maybe not always. I would say the vast majority of the time there's those growth pains, right? Where your
Mhm.
things are very tight, and that's the risk of an entrepreneur. But the reward is on the other side of that. And look where you guys are now, where you're running a fund that has $75 million of assets. And so you've come a long way since then. And if you could have given up, right? You could
Oh
have
yeah.
said, this isn't working. I'm just going to go back to a corporate job. I hate it, but it's predictable. And at least I know my bills are paid. And then just call it quits, and just give up on your dreams. And that's not the answer. That's not
No.
the answer. The answer is to push through, and you just have to know it's hard. And it's hard. There's so many, we look at people's success, we look at these TV shows, we look at all these things, and that make it look so easy to be successful. You don't see all of the tears and the hard work behind it, the 10 years leading up to that
Yeah.
success. That was Elon Musk sleeping on the floor of the Tesla factory, and like all of it, and you know, moving money around to pay and barely making payroll and all that stuff. I mean, I mean, I want to say that's probably the norm in some
Yeah.
stage of most businesses.
And you have growth out of that, as you mentioned, and you grow into a person that has fortitude, and has some thick skin, and it serves you well when later down the road in business.
Absolutely. Yep. Um, what's what? Well, as we wrap up here, I'd be curious to know. We just talked a little bit about a failure, and I would actually even say it wasn't a failure, right? You found your way through it, right? It was a challenge
Well,
that you worked your way
now I'd
through. So
say
yeah, yeah,
maybe
yeah.
now I wouldn't say it then.
So right, yes, exactly. Yeah, when you're in it, yep. Um, what's one of the biggest lessons you've learned in your years of investing? And it can be something
Yeah.
philosophical, it could be something um, practical. I'll let you decide that. But what's one of the biggest lessons you've learned?
To invest in assets, the cash flow with operators, you can have some proximity to. You can go see, you touch, feel, all of that in asset classes that you understand. So, like, we're in housing and energy.
Yep.
I mean, if you don't understand that, like, well, we need to talk.
Yeah.
It's that basic. And I learned it years ago that whole appreciation game, it's just gambling. buy low, sell high,
Yeah,
and that Wall Street's just built off gamblers. And you need to take control of that.
absolutely.
In every asset you purchase, you need to have predictability around the cash flow that's going to be emitted from it.
Absolutely. Yep. And I just finished up my last podcast was around why now is the time to invest in real estate. And that was one of the main points that I was trying to make was if you're afraid to buy real estate right now because you're afraid the prices might dip a little bit, you're buying for the wrong reason. You're buying to try to time the market. You're buying with the whole buy low, sell high philosophy. And that's so limited. That's not there that's one piece of the puzzle. And if you're only making money because of appreciation and that's your how you underwrite deals,
Hmm.
you're limiting yourself and you're probably missing the point. And lots of people made money
Absolutely.
that way the last 5, 6, 7 years. um but if that's the only piece you're looking at, you're missing the point.
Absolutely. I do have a financial statement template that I do email out. It's like a basic version of the one my wife and I uses. So if anyone is interested, you can email me at martin@bqfunds.com. I also take any questions. Doesn't I don't care if it's about our fund. Like just say that. If you have any questions in general for myself, I'll send you the statement, and please feel free to reach out.
Awesome. And if people are interested in talking to you specifically about your fund
Mhm.
and maybe interested in investing, is that the best way for them to reach out as well, or is there another way to do that?
No, that's the best way. Yeah, martin@bqfunds.com. And yeah, you can reach out with any questions.
Start a relationship, start asking some questions, and see if it's a fit. So awesome.
Absolutely.
Well, Martin, I appreciate it. Thanks again for you mentioned our back and forth with trying to get this scheduled, so appreciate you persevering through that. Uh, I think there's a lot of stuff in here that people can take in and learn and hopefully be inspired from, and then hopefully again, some people that are like, hey, what's I've been thinking about investing. I I don't have I have this money to invest, but I don't want to be an active investor. um, you're a great person to connect with as a possible option to help them invest their money and return it with more and give them that consistent cash flow, with some good assets behind it. So I appreciate
If
the
not
time.
me, somebody, Ben. If
Yeah,
this is like so serious where we're headed as an economy, as a country, as a world. I mean, you have to protect yourself. If not me, then somewhere where you're putting money away on a consistent basis and growing a cash flow stream for yourself.
absolutely. I appreciate that. Absolutely. Well, thanks again, Martin. Thanks for being here. Thanks everyone for listening. And make sure you reach out to Martin with any questions, connect with him. Regardless, put him in your network, and get to know him. He obviously has the heart behind this to be able to make sure that he's doing the right thing for people, with their hard work, hard earned, and the money that they're needing to invest. So thanks again for being with us on the show.
Thanks, Ben.